Beginning in January 1998, Sears is changing the amount of life insurance it provides for retirees. This videotape discusses the reasons and the basic facts of the change. We ask that you read the accompanying letter, which summarizes the changes, before you review the tape.
A few years ago, things were quite dark for our company, and the future was very uncertain. And through the efforts of lots and lots of people, our results have improved dramatically and our competitiveness has improved dramatically. But this industry is consistently and constantly undergoing massive change. Customers are changing, competitors are changing. And one of the things that we have to be careful of in the midst of all this success is not to become enamored of our success. We're looking at every decision in a new light, a new competitive light that we have to face every single day. And the decisions that we've made about pay and benefits delivery to our active associates, as well as benefits delivery to our retirees, is part of some of those tough decisions that re-examine old ground that we've gone over. The change for active associates involves the elimination of retiree life insurance. And for retired associates, it does reflect a change in the pre-65 retiree medical plan as well as the retiree life insurance program. These were not easy decisions to reach for a complex set of reasons. We have made some very tough decisions in this company over the last few years about its business and its strategy. The company is faced every day with hundreds, if not thousands, of decisions, and we have lots of interests to balance. We have the interests of our shareholders who own the company and to whom we are ultimately responsible. We have the interests of our active associates and our retirees who've contributed so much in the past and contribute so much today. We have the interests of our vendors and suppliers whose economic health and well-being depends on our success. So when we put all of these interests together, we have to optimize the mix in some way. We have to solve for the best answer for all of those constituencies. And while it's a tough decision to make this change, we felt very strongly, and I felt personally, that this was the right decision to make in the interests of all of those people.
Hello. I'm here to talk with you about a change in your retiree life insurance. As you heard from Arthur Martinez, the decision to make this change was based on balancing responsibilities to Sears customers, shareholders, associates, and retirees. As a business, we have to continuously examine costs and compare them to those of our competitors. When a particular cost is noticeably higher than the market average, we need to reevaluate whether it's reasonable. Retiree benefits are one of our costs. In fact, for 1996, as a percent of revenues, Sears retirement program costs were significantly higher than those of other major retailers. And our retiree life insurance is a portion of that cost. Because you haven't been paying premiums for retiree life insurance, some retirees may believe the insurance is a paid-up policy, but it's not. It's like auto or homeowners insurance. You pay for coverage 1 year at a time. After you retired, Sears has continued to pay for the coverage. With nearly 100,000 retirees covered by retiree life insurance, the cost for Sears is enormous. Faced with the difficult choice of continuing or eliminating a high-cost program, Sears made the decision to gradually reduce the retiree life insurance benefit provided by the company. Beginning in January 1998, the life insurance amount that Sears provides will be reduced each year for 10 years until it reaches $5,000. You'll have an opportunity to buy back the reduced amount. You can buy the replacement coverage at group rates, which are generally less expensive than buying insurance on your own. And this is very important. You don't have to go through a physical exam. You can buy replacement coverage regardless of your health. Here's how it will work. Let's say your current life insurance coverage provided by Sears is $20,000. Over 10 years, the coverage you have that's above $5,000, $15,000 in this example, would be reduced by 1/10 each year. That's $1,500 a year for a total reduction of $15,000. You can choose to replace all of your reduced coverage or a portion of it, Or you can choose not to replace the coverage and keep only your Sears-provided coverage as it phases down to $5,000. Your cost for replacement coverage is shown on this, your personalized retiree life insurance information and response form. Before going into a discussion of cost, it will help to look at the area marked Your Annual Reduction Amount on your personalized form. This tells you how your annual reduction amount was determined. Then take a look at the buyback schedule on your personalized form. Column 1 shows your age each year that the buyback is offered. This is important because your age, along with the replacement amount, determines your cost for coverage. When you look at column 2, you'll see how much coverage Sears is providing for you each year. In column 3, you'll see the amount of coverage you can buy back each year. During the next 10 years, you'll have the option to replace all of this amount or a portion of it. The first half of column 4 shows your annual cost for buying one increment of replacement coverage. It also shows how the cost of purchasing only one increment of replacement coverage increases as your age increases. The second half shows your cost to purchase the maximum amount of replacement coverage each year. No matter how much replacement coverage you choose to buy, whether it's for one increment or for several increments, the cost will continue to increase along with your age. Please see page 5 in your overview booklet for a complete list of age-based rates. As you may know, the cost of life insurance is lower when you're young and increases as you grow older. Many people reduce or eliminate their life insurance coverage after they retire because the cost of coverage for older individuals often outweighs the need for carrying life insurance. When you consider whether you want to replace any of your retiree life insurance, it may be useful to talk to someone who can help you weigh the value of buying additional life insurance. There may be other things you would prefer to spend your money on. Please carefully review the overview booklet that came with this video. If you have questions about how the phase down of Sears provided coverage works or about buying back replacement coverage, you also can call the Retiree Service Center at 1-800-762-7327. Trained benefit representatives are available to answer your questions Monday through Friday between 8 a.m. and 5 p.m. Central Time. This is a one-time opportunity to sign up for retiree life insurance replacement coverage. Once you've enrolled, you'll have an annual opportunity to review your participation and maintain or terminate your entire coverage, or stop buying additional replacement coverage. Once you stop increasing your replacement amount in any given year, you will lose all future opportunities to increase your coverage in the replacement plan. You can enroll in the plan by completing and returning the personalized enrollment form included in this package. Don't send any money in now. You'll receive billing later. Even if you don't want coverage, please return your response form by November 7th, 1997. Also keep in mind that the amount of the premium you pay will increase every year as your age increases. So take some time to think about what you want to do. Evaluate your need for life insurance and consider whether the cost of purchasing replacement coverage makes sense for you.